Good morning, it's Quant Trade Edge, and we're taking another look at natural gas as this potential rally attempt continues. Yesterday, Monday, after the weekend, natural gas prices gapped down to the bottom half of this bullish green candle. That is called it's either an oops or an ouch. I forget exactly which one refers to this pattern, but it's basically a sign that anyone who bought up here is trapped. They're waking up with a huge loss and they're selling on top of each other, and that's what we saw for most of the day yesterday. Now, if you remember from the previous videos, our hypothesis, and it doesn't have to play out, of course, is that since we got this higher high, if we get a higher low and we take out this higher high, that will make a U-turn, and this part of the rally is what you would want to capture. You put that in a rectangle, make it easier to see. This will be the sure part. Everything we're doing up until then is really just watching the pattern evolve day after day to create that one pattern that is very tradable with a good risk reward. Now, the first step, if this is to happen, and again, there's no guarantee that this has to happen. We can just go straight down and make new lows. Markets will do what they want to do. What we're trying to do is find preconditions that then give us a high probability that the next move will happen. And that's what we're doing here. The first precondition is a higher high on the daily, a higher low, and then if we take out that 3027, that higher high, this piece of the move will be the low risk, high probability trade. So what we've done so far today is that red line is yesterday's low, previous day low. We've gone and tested below it and gotten rejected. And what I saw in there was a pretty clean 2B pattern. And a 2B pattern was popularized by Trader Vic, Victor Speriando, hope I'm saying it right, where you basically go below a previous low, and then the bar which went below the previous low, in this case, it's this bar here, and this is a 5-minute chart. You can do this on a 15, on a 30. I like to do it on a shorter time frame, and the shorter time frame will fail more often, but the way I trade it, the tighter the risk, the higher the return. So I would rather have a few more failed trades, but then have an 8x return instead of a 3x return on the eventual winner. So in this situation, you can see the low was made at 1:20 p.m. yesterday, and today we took out that low overnight at this 9:45 p.m. bar. And I'm just putting this rectangle around the bar. The high of that bar is 255, the low is 252.1. So you would buy, after this low is made, you would buy when you get above 255. In this case, it would have been on this bar at midnight, 12:05 after midnight, and your stop would be the bottom of that bar, which you can see that after it entered has not been taken out. And the size of this bar is 3.1, so your stop to target, no, I'm sorry, the stop is not 3.1, it's 2.9, so your stop to target would be 3.1. And if we see from 2.551, so far we've gone as high as 265.5. Let me just pull up a calculator, see if I can do that math real quick. To 65.5. Let's call it 4 for the tick of exit. 255.1 and 3.1. So far you've had a little bit over 3R on this trade, meaning going from here up to about, somewhere up here, this was your risk and you've made 3 times your reward. And at this point, it's still flagging. There could be more to come on this. However, you do see how there is this divergence right here. So that's probably what led to this consolidation. And the other thing to keep in mind is that after a fairly trending day, you do end up with 2A action in the morning. So I wouldn't necessarily expect this to just rally back right away. It could range out for a while and then it could rally, or it could range out for a while and fail. But this is just kind of one of those little patterns you can catch pretty much on any given day, but especially since on the daily, after this move, we would look for it to test lower and then come back into range. So that just makes it that much easier to look for this type of trade. Now, if we look at the 2-period ROC, and I haven't done this yet, so I'm just doing this on the fly, still kind of a low here. So, the momentum is not shifting up. What we would expect to see is for this momentum here to shift up, and it's probably not going to happen today, which means that we could have another day where we do something like this and test lower again. But eventually we want to see this pop up on something that looks like this, like what I drew in there. And then that would be a good sign that the following day could be a day where the rally resumes. Anyway, just keeping you up to date. It's 9:20 a.m. Central, and have a good day.